How you doing, guys? Welcome back. It's LSP. It's currently the 6th of July 2022. So I want to go over a chart that I've just posted on Twitter, and I'm going to explain points 1, 2, 3, and 4, and why, whether we're in a downtrend or whether we're in kind of bearish situation, we can still try to ascertain what price is going to do in the short term. And then once we have that information, it's just a question of basically waiting for one of these things to kind of unfold, and then we can make better informed investment decisions. Before I get into the chart, if you're not already subscribed to the channel, please consider doing so. Smash that like button and let's get over to the charts. So here is the chart that I posted on Twitter. These two areas here, 2 and 4, are effectively liquidity pools. It's resting liquidity. Or in this case, it's actually open liquidity, just based on the way that price is moving. And all that means really is because of the higher time frame kind of bearish tone and the way that price is being dragged to the downside, price is seeking for something, it's looking for something, right? And along the way, it's accumulating, distributing, just basically buying, selling. And we're trying to kind of figure out where that flow is and where's that kind of end point, objective fulfillment, right? Once we get to that end point, we can consider that price is rebalanced at that point, and then we can start to see potentially a bottom put in and then some upside momentum. But with these two areas of liquidity, if this one is traded to straight away, then that's great. Okay, that kind of stabilizes the market a little bit. It may take a little bit of time for price to kind of grind up there. If it does, I would want to see price get above 22k, above all of these highs. Stabilize, hold, and then maybe go for that sort of last leg into 23 to 24,000. But in the meantime, and let's just zoom in a little bit, if price comes down and trades to 1, the reaction at this point, okay, will tell us whether or not price is going to reverse, go higher, and start to try to drive towards number 4, which is up here. So the reaction at 1 tells us whether we're going to be basically going to 2, 3, or 4. All right. And then when we, assuming we get to 2, for example, then we would check the reaction again, price sensitivity. What does that mean for the full structure of price? So for example, just to keep it really, really simple, if price came to 1 and it reversed very, very quickly, something similar to what we saw here, then it's very likely that we may continue to drive towards 22,000. Then we can ascertain whether or not 4 is in play. If that doesn't happen, and price gets to 1 and basically just kind of hovers around there a little bit and starts to drive towards 2, snaps back a little bit, but doesn't really show any signs of recovery, then it's very likely we're going to be trading down to number 3. And this is the way that I, along with some other analysis, I like to kind of look at the flow of price, the flow of orders, to try to get a feel for whether or not we are in a short-term bullish flow or a short-term bearish flow. In terms of the overall market picture and broader market weakness, that's still there. There's no question about that. We wouldn't be going sideways or kind of grinding and not really showing any signs of upward momentum if price was bullish. It simply isn't. Bitcoin is still quite bearish. The markets across the board are still quite bearish. We're not seeing anything, that's an indication that sentiment is changing at all at the moment. Things may change, obviously, and it's not all doom and gloom. When you're looking at charts this way, or you have a very solid analysis plan and methodology for investing, keeps you nice and calm. You're not really, like, for me, I don't care whether price goes up or down. What I'm trying to figure out is where do I get in? Like, when's the best time for me to accumulate and start to engage in the market? Now, obviously, you guys know I'm waiting for 150 on Binance. If I don't get 150, then I have to see 350 and hold. Just like with Bitcoin, if we don't get that move lower, we have to see 22,000 and hold. If you trade this way or analyze this way and you wait for these moments to happen, you remove this really annoying lack of discipline and kind of forced mentality in the sense of gambling, where you start saying to yourself, I want to basically get in now because I want that move to 22,000. It becomes an anticipatory trade, an anticipatory investment, and again, if you're accumulating Bitcoin over 10 years, for example, these are great prices, assuming that you believe in Bitcoin and everything, and everything that it stands for, and that price is going to go back to all-time high, for example. That's a plan, that's a methodology, and that's, what some people do. For me, I always try to find that best key moment where I can look at price and say, yeah, this kind of makes sense to me. So if I just go back to the chart for a second, and I'll just show you again. This number 1 is very important. This number 1 is key. We really need to see a reaction down here, right, that is conducive to a healthy, bullish, short-term order flow. All right. So if price does come down to 1 and we see that, then we're likely to see number 4, and it slows everything down, pushes everything up with it. The entire market will follow, and then we can start to see some decent prices on Binance, a little bit of recovery across the board, and that kind of helps to even the mood. And I'll say sharpen people's attention. All right. So very quick update from me. I'll try and put one out later. It's unlikely, but if I do, it will be sort of post 8 o'clock or post 8 o'clock this evening GMT time. And with all of that said, hope everyone's having an absolutely fantastic day or evening wherever you are in the world. And I look forward to seeing you in the next update. All the best. Take care. Ciao for now.